These are stocks that AI forgot, but I don't think you should forget them. The first one is IT. Now we can see a nice cup with a handle, very smooth, and it has formed a handle in the upper third of the base. It has jumped out today. Of course, I'm going to recommend it today. Just buy above the high of this candle. Stop is just below. If it comes back here, not to be trusted, then it might set up, but not on volume. So that's why I'm a little bit skeptical. But this is a very strong stock. It has formed a very nice long base. The base has taken about 20 bars. Last time the base took about 14 bars and produced 150% move. This one has sat for 20 bars. How far can it go? We're not sure, but the setup is as good as they come. Of course, I started out my position here in the low chit, and then now here in the handle, I'm just gonna go full on and then see where that takes me. One in cyclical sector as well. If you're enjoying this video and want to build financial freedom using the stock market, I put together a free guide called 10 chart patterns that make money. It's based on the exact system that we use at Profit Punch, a financial newsletter and educational hub that sends you A+ stock setups where we tell you exactly when to buy and sell, and also will teach you stock trading from the ground up. These are the same patterns that our members use to catch moves like SMCI 250%, NVDA 200%, AppLovin 350%. The guide is short, visual, and beginner friendly. Just click the link in the description or pinned comment to grab your free copy. Now back to the video. So we are in the cyclical sector. So it's IT, Carvana, and then I'm going to show you leisure stocks. Now Carvana jumped up, and like I said, when stocks go through a falling 50-day moving average, they normally come back and test it. So I think that's what is happening with Carvana. Now, of course, this might be its last move, so we have to just be patient and see if Carvana is actually even gonna make a final move. So you have to wait for it to recover, but it's on the radar. Then there are leisure stocks. Leisure stocks have been doing quite well. The first one is RCL, as you can see, recommended. This was a cup with a handle. This was a late stage base. So it only moved up a little bit. So this, you normally want to wait for the big bases that come during a market correction. This one was a late stage base and it moved up, but then it fizzled out quickly. Here we see it, it comes back, sets up again, a cup with a handle, and then now it's just going, and then we're just gonna wait and see. That is the best stock in the leisure sector, so you always want to have the best stocks. The second best stock in the leisure sector is CUK. It has the same pattern as the previous one, cap with a handle, but I wouldn't call this a handle because it's not in the upper third of the base. This is in the middle part of the base. I would just avoid the second best stocks. CUK and CCL are very similar stocks, but I wouldn't trust them that much. You always want to be in the best stock. It's very tempting to be in the second best stock, but you always want to be in the best stock. Now, after the cyclical sector, those were cyclical stocks. I gave you 4 stocks: Carvana, RCL, and CUK. The next one is engineering and construction. So there is Fix, which I also already sent out a recommendation, cup with a handle. But this is not one of the strongest sectors. But you can always have a stock in such sectors because it can help you diversify your portfolio, right? So you can get the faster moving sectors, and then you can get something like Fix. And because these things, they're not too bad, they do move. Last time Fix here did 50% move in just about 5 weeks. Then here, it also did another 50% move. Fix could do maybe a 40% move. That can be very good for your portfolio. In the same sector, there is MA. So Fix is the best stock. So Fix is the second best stock in this sector. The best stock in this sector is AGX. This one has already moved as well, so it's gone, but we have to just watch and wait. So this one is a little bit confusing because it kind of broke out here. Sometimes they break out from the middle part of the base, and it has gone up about 60% maximum from a good buy point. The third best, which I would recommend you not to be in, is MA. Always avoid the third best stocks. Always focus on the best 2 and the best one if you can. In defense and aerospace, which is also a very hot sector right now. So there's RKLB. It has been setting up quite nice, but it jumped out here and then it came and closed under the 20 days. It showed weakness. Is it going to recover? It has recovered, and if it comes above this high, you can start rebuilding your position again. So that's how these things work. And then we want the last chit to be less than 3 times of the average true range. So we want it to be less than about 20%, so 15%. I'm not counting these spikes because they don't seem to matter just counting the closest. It's about 16%. If it jumps out of here, it's going to be a very good buy. Last year, you saw what this thing could do. Moved up about 300% this year. Not sure, but looking forward to it. I think this is the best stock in the defense sector in terms of movement. The second best is ACHR. This one has been very volatile. That's why I don't like it, because it had this very huge correction here of 30%, and then we were looking for at most 24% correction. It jumped up again and then came back down. So you see, this smaller stocks can really put you through the work. That's why it's always better to go with the best stock and big stocks, because they don't do things like this. And last of the stocks that you have forgotten about, this is one of the best stocks on the market, is HIMS. We can see HIMS just formed this nice cup, and it seems to be forming a handle, right? Now this handle is not looking too good. I already recommended it to people, but that was on this particular day. So people took some profit here, it came back down. Ideally, you should be out by now. Wait for a good setup. The reason why I'm not loving HIMS right now is that it is wedging up. Whenever price struggles to go in a particular direction, that's always a sign that the stock might go into the opposite direction. You don't want things to suffer to move. When it's going up, the moving is easy. But here it's struggling to go up. Ideally, we want to see it from a pattern where it wedges down and then jumps out of that wedge. So like here, it looked like it was going to break out, came back down, tested the breakout level again, and then jumped up about 150%. So that was a very sweet move. And yeah, that was the last stock. I hope you found value in this video. This is quite a long video, and may the markets be with you.